Question 1. Which of the following would NOT typically be covered under business owner's policy BOP? A. Business income lost due to a covered peril. B. Liability for injuries to third parties on business premises. C. Employee dishonesty coverage for a trusted employee. D. Damage to property caused by an earthquake. Answer D. Damage to property caused by an earthquake. Explanation. A business owner's policy BOP provides essential coverage for small to medium-sized businesses, including property damage, business income loss, and liability for injuries. However, it typically does not cover natural disasters such as earthquakes unless specifically endorsed. Earthquake damage is excluded from standard BOP coverage. To have coverage for earthquakes, an additional endorsement would need to be added to the policy. Question 2. Mr. Thompson owns a small retail business and has a commercial general liability CGL policy. During your promotional event at his store, a customer slips on a wet floor and sustains injuries. What is the first thing Mr. Thompson should do in this situation? A. Inform his insurer and file a claim. B. Ask the customer to sign a waiver of liability. C. Immediately begin repairs to the floor to prevent further accidents. D. Investigate whether the customer's injuries were caused intentionally. Answer A. Inform his insurer and file a claim. Explanation. When an accident occurs at a business and results in an injury, the business owner's first step should always be to inform their insurance company and file a claim. This ensures the insurer can begin the process of evaluating coverage and addressing the potential liability. While repairs and investigations are necessary, the priority is to notify the insurer to manage the claim and any legal obligations. Notifying the insurer helps ensure compliance with policy conditions, which often require prompt reporting. Question 3. Which of the following is a key difference between commercial auto insurance and a garage liability policy? A. Commercial auto insurance provides liability coverage for accidents involving employees, while garage liability covers only third-party accidents. B. Commercial auto insurance covers damage to vehicles, whereas garage liability covers property damage only. C. Commercial auto insurance provides physical damage coverage for company vehicles, whereas garage liability covers damage arising from vehicle servicing. D. Commercial auto insurance excludes liability for bodily injury, whereas garage liability includes it. Answer C. Commercial auto insurance provides physical damage coverage for company vehicles, whereas garage liability covers damage arising from vehicle servicing. Explanation. Commercial auto insurance is designed to cover vehicles owned by the business, including physical damage and liability arising from accidents. Garage liability insurance, however, is more specific to businesses that service vehicles, such as repair shops, and covers damage to customers' vehicles or injuries that occur in the process of servicing those vehicles. It also includes liability for damage caused by the business's operations, such as vehicle repairs or test driving. Question 4. Which of the following is NOT an exclusion commonly found in a commercial general liability CGL policy? A. Expected or intended injury. B. Pollution liability. C. Damage caused by an employee while performing routine work. D. Contractual liability. Answer C. Damage caused by an employee while performing routine work. Explanation. The commercial general liability CGL policy generally excludes coverage for expected or intended injury, pollution liability, and certain types of contractual liability. However, damage caused by an employee performing routine tasks is typically covered by the CGL as long as the damage is not intentional or excluded under specific endorsements. This coverage is designed to protect businesses from claims arising from accidents or mistakes during normal operations. Question 5. Mr. Clark owns a warehouse and has a building and personal property BPP coverage form under his commercial property policy. If fire damages the warehouse building and the value of the property is $100,000, the policy includes a $10,000 deductible and a 90% coinsurance clause. What will Mr. Clark be reimbursed for if the loss is valued at $100,000? A. $90,000. B. $90,000 minus the deductible. C. $100,000. D. $100,000 minus the deductible and coinsurance penalty. Correct answer B. $90,000 minus the deductible. Explanation. In a commercial property policy with a 90% coinsurance requirement, the policyholder must insure the property for at least 90% of its replacement cost. If the property is underinsured, the insurer will reduce the claim payment by applying a coinsurance penalty. In this scenario, if Mr. Clark's coverage meets the coinsurance requirement, the insurer will cover the full amount of the loss minus the deductible Therefore, the total reimbursement will be $100,000 minus the $10,000 deductible, resulting in a reimbursement of $90,000. Question 6. Which of the following types of liability is generally covered under commercial general liability (CGL) policy? A. Professional errors and omissions liability. B. Personal and advertising injury. C. Employer's liability for workplace injuries. D. Pollution liability. Answer B. Personal and advertising injury. Explanation. A commercial general liability (CGL) policy provides coverage for a variety of liabilities, including bodily injury, property damage, and personal and advertising injury. Personal and advertising injury includes offenses such as libel, slander, copyright infringement, and advertising violations, while professional errors and omissions liability, employer's liability, and pollution liability may require separate policies or endorsements. Personal and advertising injury is a standard coverage under a CGL policy. Question 7. Mr. Evans operates a construction business and has a commercial auto policy with hired and non-owned auto coverage. If one of his employees is involved in an accident while driving their personal vehicle to run an errand for the company, which of the following statements is true? A. The employee's personal auto insurance will be the primary coverage. B. The commercial auto policy will cover the loss in full, as it includes non-owned auto coverage. C. Mr. Evans's insurance will cover the loss only if the employee was driving a company-owned vehicle. D. The employee will have no coverage, as personal vehicle use is excluded under all commercial auto policies. Answer A. The employee's personal auto insurance will be the primary coverage. Explanation. In situations where an employee is driving their personal vehicle for business purposes, the employee's personal auto insurance is generally the primary coverage in the event of an accident. The commercial auto policy with hired and non-owned auto coverage provides secondary coverage, meaning it will cover any remaining costs after the employee's personal insurance has been exhausted. It's important for businesses to ensure that their employees have appropriate personal auto insurance when using their own vehicles for business activities. Question 8. Which of the following is an example of a risk management technique in commercial insurance? A. Using an insurance policy to transfer the risk of fire damage. B. Ignoring a potential hazard because it is unlikely to occur. C. Increasing policy deductibles to lower premiums. D. Failing to conduct safety training for employees. Answer A. Using an insurance policy to transfer the risk of fire damage. Explanation. Risk management involves strategies to handle potential risks effectively. One key risk management technique is transferring the risk, such as purchasing an insurance policy to cover potential losses from events like fire damage. This approach ensures that the financial burden of a loss is shifted to the insurer. The other options, B, C, and D, either involve ignoring, avoiding, or failing to address risk properly, which is not a sound risk management practice. Question 9. Which of the following endorsements would be most appropriate for a business that stores valuable documents and needs coverage for damage to these items? A. Accounts receivable coverage. B. Valuable papers and records coverage. C. Business income coverage. D. Ordinance or law coverage. Answer B. Valuable papers and records coverage. Explanation. Valuable papers and records coverage is an endorsement that provides coverage for physical damage to business documents, records, and other paper-based materials, including books, maps, and manuscripts. Its coverage is crucial for businesses that store critical documents that are not easily replaced. Accounts receivable coverage, business income coverage, and ordinance or law coverage serve different purposes, such as protecting accounts receivable records, covering lost income due to property damage, or addressing compliance with local building codes. Question 10. Which of the following is the primary purpose of subrogation in an insurance policy? A. To allow the insurer to recover the amount paid on a claim from a third party that caused the loss. B. To ensure that the policyholder can recover damages from a third party. C. To allow the insurer to pay claims directly to the injured party. D. To prevent insurance fraud by monitoring policyholder activities. Answer A. To allow the insurer to recover the amount paid on a claim from a third party that caused the loss. Explanation. Subrogation is a process by which an insurer, after paying a claim to the insured, assumes the right to recover the amount of the claim from the third party that caused the loss. This helps prevent the insured from being compensated twice and allows the insurer to recoup some or all of the amounts paid out. Subrogation is a standard feature in most insurance contracts and ensures fairness and reduces overall costs in the insurance system. Question 11. which of the following is true about the valuation of property under a commercial property insurance policy? A. Actual cash value (ACV) always provides the same reimbursement as replacement cost. B. Replacement cost coverage does not take depreciation into account when reimbursing claims. C. The insured must always choose actual cash value coverage over replacement cost for greater reimbursement. D. Replacement cost coverage is limited to the amount of the original purchase price of the property. Answer: B. Replacement cost coverage does not take depreciation into account when reimbursing claims. Explanation: Replacement cost (RC) coverage reimburses the insured for the cost to replace or repair damaged property with similar property of like kind and quality, without factoring in depreciation. In contrast, actual cash value (ACV) coverage includes depreciation, meaning the payout is based on the current value of the property, which could be less than its original cost. Therefore, the most accurate choice is that replacement cost coverage does not account for depreciation when reimbursing claims. Question 12. Which of the following perils is typically covered under a standard business owner's policy? A. Earthquake damage. B. Flood damage. C. Fire damage. D. Wear and tear. Answer: C. Fire damage. Explanation: A standard business owner's policy (BOP) typically includes coverage for fire damage as part of its basic perils. Earthquake and flood damage require separate policies or endorsements, while wear and tear are considered maintenance issues and are generally excluded from coverage. Question 13. In a commercial general liability CGL policy, which of the following is an example of a personal injury? A. Slip and fall accident at a business location. B. Libel or slander claim. C. Damage to a customer's property during repairs. D. Product liability claim for defective merchandise. Answer: B. Libel or slander claim. Explanation: In a commercial general liability CGL policy, personal injury typically refers to non-physical injuries such as defamation, libel, slander, or invasion of privacy. Physical injuries like slip and fall accidents and property damage are covered under different sections of the policy. Question 14. Which type of insurance policy is best suited to cover contractors' tools and equipment at various job sites? A. Business owner's policy (BOP). B. Commercial general liability CGL policy. C. Inland marine policy. D. Commercial property policy. Correct answer: C. Inland marine policy. Explanation: An inland marine policy is designed to cover property that is mobile or used at multiple locations, such as a contractor's tools and equipment. This type of policy offers coverage for property in transit or located off-site, making it ideal for contractors who work at various job sites. Question 15. Which of the following best describes the purpose of business interruption insurance? A. To cover the cost of repairing damaged property. B. To compensate for lost income due to a covered peril. C. To provide liability coverage for third-party claims. D. To reimburse employees for lost wages. Answer: B. To compensate for lost income due to a covered peril. Explanation: Business interruption insurance provides coverage for lost income and operating expenses if a business is unable to operate due to a covered peril such as a fire or storm. It ensures financial stability during periods of disruption by covering expenses like payroll, rent, and taxes. Question 16. A commercial auto policy includes a combined single limit, CSL $500,000. If an accident results in $300,000 in bodily injury claims and $200,000 in property damage claims, how much will the insurer pay? A. $300,000. B. $500,000. C. $200,000. D. $0. Answer: B. $500,000. Explanation: A combined single limit (CSL) policy sets a single coverage limit for all damages resulting from an accident, regardless of whether they are bodily injury or property damage claims. In this case, the total damages of $500,000 fall within the CSL, so the insurer will pay the full amount. Question 17. Which of the following is a key characteristic of a claims-made liability policy? A. It provides coverage for claims that occur during the policy period, regardless of when they are reported. B. It only covers claims reported during the policy period or extended reporting period. C. It provides coverage for events that occurred before the policy period. D. It requires the insured to pay all defense costs out of pocket. Answer: B. It only covers claims reported during the policy period or extended reporting period. Explanation: A claims-made liability policy provides coverage only for claims reported during the active policy period or an extended reporting period. This is in contrast to occurrence policies, which cover incidents that occur during the policy period, regardless of when they are reported. Question 18. Which of the following is not typically covered under commercial property policies? Causes of loss. Special form, A. Theft. B. Vandalism. C. War. D. Lightning. Answer. C. War. Explanation. Commercial property policies typically exclude coverage for war and related acts. The causes of loss. Special form is an war risk policy that covers all perils unless specifically excluded, including theft, vandalism, and lightning. Question 19. Which endorsement would be most appropriate for a business that operates in a high-risk flood zone? A. Earthquake coverage endorsement. B. Flood insurance through the NFIP. C. Ordinance or law coverage endorsement. D. Utility services coverage endorsement. Answer. B. Flood insurance through the NFIP. Explanation. Flood damage is excluded under standard commercial property insurance policies. Businesses in high-risk flood zones should purchase flood insurance through the National Flood Insurance Program (NFIP) or private insurers that offer similar coverage. Question 20. What is the primary purpose of an additional insured endorsement in a liability policy? A. To increase the overall policy limits. B. To extend coverage to third parties with an insurable interest. C. To cover risks excluded under the main policy. D. To provide higher deductibles for certain claims. Answer. B. To extend coverage to third parties with an insurable interest. Explanation. An additional insured endorsement allows a third party, such as a landlord or contractor, to be covered under the liability policy for specific risks. This endorsement is often required in contracts to protect the additional insured from claims arising from the named insured's operations. Question 21. Which of the following best describes coinsurance in a commercial property insurance policy? A. A clause that limits the insurer's liability to a percentage of the loss. B. A deductible applied to each claim filed. C. A requirement for the insured to carry a minimum amount of insurance relative to the property's value. D. A provision that allows the insured to share premiums with other policyholders. Answer. C. A requirement for the insured to carry a minimum amount of insurance relative to the property's value. Explanation. Coinsurance is a clause in commercial property insurance requiring the insured to carry a specified percentage, e.g., 80% or 90% of the property's value in insurance coverage. If this requirement is not met, the insurer may reduce the claim payment proportionally. Question 22. Which of the following is true about umbrella liability insurance? A. It replaces the need for primary liability insurance. B. It provides coverage only for professional liability claims. C. It offers additional liability coverage above the limits of underlying policies. D. It is mandatory for all commercial policies. Answer. C. It offers additional liability coverage above the limits of underlying policies. Explanation. Umbrella liability insurance provides extra liability coverage above the limits of primary policies such as general liability or auto insurance. It also offers broader coverage for certain risks not covered by the underlying policies, ensuring better protection against catastrophic losses. Question 23. Which of the following is an example of a peril typically excluded from a commercial property insurance policy? A. Fire. B. Lightning. C. Earthquake. D. Vandalism. Answer. C. Earthquake. Explanation. Earthquake damage is generally excluded under standard commercial property insurance policies but can be covered by purchasing a separate endorsement or policy. Fire, lightning, and vandalism are typically covered perils. Question 24. Under business auto policy BAP, what does symbol 1 represent in the declarations? A. Owned autos only. B. Non-owned autos only. C. Any auto. D. Hired autos only. Answer. C. Any auto. Explanation. In a business auto policy BAP, symbol 1 provides the broadest coverage applying to any auto, including owned, non-owned, and hired vehicles. Question 25. What is the primary purpose of the loss of income coverage in a commercial insurance policy? A. To reimburse the business for lost profits due to a covered peril. B. To pay for damage to the insured property. C. To cover the costs of legal defense in liability claims. D. To compensate employees for lost wages. Answer A. To reimburse the business for lost profits due to a covered peril. Explanation. Loss of income coverage compensates a business for lost profits and ongoing expenses, such as payroll and rent, during a period when operations are disrupted due to a covered peril. Question 26. Which type of policy is best suited for a business with employees who travel frequently and rent cars for work purposes? A. Commercial auto policy. B. Hired and non-owned auto liability policy. C. Business owners policy. BOP. D. Inland marine policy. Answer. B. Hired and non-owned auto liability policy. Explanation. Hired and non-owned auto liability coverage is designed for businesses that do not own vehicles but frequently rent cars or use employee-owned vehicles for business purposes. Question 27. What is the function of the replacement cost valuation in a commercial property insurance policy? A. To pay the current market value of the property. B. To reimburse the cost of repairing or replacing damaged property with similar materials without depreciation. C. To pay a fixed amount regardless of the actual damage. D. To reimburse the cost of improvements made to the property. Answer. B. To reimburse the cost of repairing or replacing damaged property with similar materials without depreciation. Explanation. Replacement cost coverage pays to repair or replace damaged property with materials of similar kind and quality without factoring in depreciation. This differs from actual cash value SEV, which considers depreciation. Question 20. Which of the following is a characteristic of a blanket property insurance policy? A. It provides coverage for a single specific location. B. It covers multiple properties or locations under a single limit. C. It excludes coverage for personal property. D. It only applies to high-value properties. Answer. B. It covers multiple properties or locations under a single limit. Explanation. A blanket property insurance policy combines coverage for multiple properties or locations under a single insurance limit, providing flexibility and comprehensive protection. Question 29. Which type of liability insurance would most likely be needed by a manufacturer of children's toys? A. Product liability insurance. B. Professional liability insurance. C. Commercial general liability insurance. D. Directors and officers liability insurance. Answer A. Product liability insurance. Explanation. Product liability insurance covers claims arising from defective or unsafe products. Manufacturers of children's toys need this coverage to protect against lawsuits related to injuries or damages caused by their products. Question 30. In a workers' compensation policy, what does employers' liability insurance typically cover? A. Medical expenses for injured employees. B. Lawsuits filed by employees for job-related injuries not covered under workers' compensation. C. Lost wages for employees unable to work due to injury. D. Costs of workplace safety training programs. Answer. B. Lawsuits filed by employees for job-related injuries not covered under workers' compensation. Explanation. Employers' liability insurance provides coverage for lawsuits brought by employees or their families alleging negligence or other issues related to workplace injuries that are not covered under workers' compensation laws.